Ladies and gentlemen of the crypto space, we're live on a Monday, July 31st at 11:40 a.m. Today's a good day to talk, I think. Assess your risk. Now, that's not necessarily what this meme was created for, but it seemed appropriate and time constrained for me to use it with such a stoic face. I mean, the original character has a stoic face as well, but putting mine on there, it's even more stoic. So today we're going to talk about risk. We're going to talk about capital management in general. We're going to talk about what happened over the weekend. We're going to talk about why is the captain so cool, calm, and collected. These types of things are expected. And it's not just saying, all right, but it's part of the risk equation. And investments are only part of the capital management process. You have to have your cash. So let's pop it over to the screen and see where we are in markets. Bitcoin didn't budge. Ethereum barely budged. So this wasn't systemic. And a good post related to the curve topic is over here. There was about 4 pools, 70 mil tops. A lot of it's getting refunded. And generally speaking, it's people have sentiment regarding Michael's outstanding debt positions, and we'll see what plays out in that regard. So there's complexities there, but other channels will dig in, like, is it responsible? Is it irresponsible? What's going on? Is it going to get liquidated? And I think everyone's always off base. Considering my equation for how I look at markets and why I'm so cool, calm, and collected. Capital management reduces to what could you do about it? If you're afraid and you're uncomfortable, you shouldn't be in the position. And if you're a locked position, then you can't sell the position, which is basically makes it irrelevant for contemplating or thinking too much about the equation. As I stated yesterday during somewhat of the mayhem, life reduces to choices based on available options. What can you do? And if you can't do anything about it, you've simplified the equation. So if you're uncomfortable, you shouldn't necessarily be in positions. Now, the other part of the equation is you need to take risk in order to pretty much achieve anything from a capital standpoint, a capital management standpoint. Without risk, there is literally no opportunity for gain, and we don't need to go all the way back to the base equation that if you're not investing, you're not going to get anywhere. You're not even going to retire in the way the economy is structured nowadays. So how have you simplified the risk equation? How do you simplify the risk equation? Notice how there's mostly questions today. Now, everyone's going to have a different calculation and how to simplify the risk equation. You do that predominantly with position size, but you have to have a fair amount of cash. And how do you define cash? Everyone's going to define cash a little differently. A lot of good questions, actually. Good mornings. Let's go over the comment thread real quick, and we'll try and pick it up. H. Diz, good morning. Earman, good. I understood the risk staking thing. Well, yes. Everything you do, you must assess the risk. The most important thing is, do you have enough cash to pay your bills? Because if you don't pay your bills, then you potentially lose something. So that's imperative. So which means the cash flow is still functional, and hopefully folks have a diversified source of cash flow, and it's not just from one particular asset that we've talked about over the years that I still think is in a very good position to be successful over the coming years. Plenty of other positions, and obviously the Aura Balancer Federation is completely unbudged as a result of this weekend's events. TVL, from a curve perspective, has dropped significantly, and this is day zero. This is mop-up day. everyone right now is working and assessing the effects, and obviously the social media is only a poor glimpse into what's actually going on. You know, folks often talk about, they call it conspiracy theories, but I like to think of things in a positive connotation. There's a whole lot of collusion that goes on in the global financial system, and we do not know what individuals are actually doing and what their motivations are. All we do is get a secondary knock-on effect glimpse of why things occur. So I have my own wild thoughts about the debt that Michael has, about how these LPs are managed, who owns Curve, good supplies of CRV. And I think things are going to play out in a very interesting way. And I'm more optimistic than pessimistic. I'm not generally a pessimistic person. I think nothing was revealed that invalidates the functionality of the platform. I think imbalances occur today as a result of the price effects, which introduce a great deal of complexity with regard to potential position sizes, and a lot of folks are maybe taking risk off the table. And that's probably what's going to happen from an overall financial system perspective. The bigger story today is not what happened over the weekend with regard to the older, Viper compiler issue. It's probably from a macro financial perspective. So don't let micro financial issues, such as what happened, cloud the greater picture from a risk perspective. There's much greater risk in macro financial land. Well, I won't digress too far into that. Let's see if there's any questions first. NJB, it's not the hack, it's Michael's debt. Yeah, it's big issue. There's so many big issues. Credit is freezing. When I saw that corporate bond yields are 0.16% greater than Fed funds rate, I don't think folks get it. Like the whole system is on the verge of, like the stock market just completely tanking. Why would anyone take the risk of having exposure to these assets when they're not, the risk to reward ratio is completely skewed horribly? It doesn't make any sense. We're on the verge of risk off, which is a flow of capital from one asset type to another. And that type of risk trumps anything and everything that we could possibly talk about today from the events over the weekend. That means everything is going to get slaughtered from a price action standpoint, because price directionality starts at the margins, and risk off causes contagion, and you have volatility everywhere. And this is why I go back to my core methodology of, do I have enough cash? I'm not going to be frantic. I've told myself over the years, and I've gotten better at it, that when shit hits the fan, there's nothing you could do about it. Maybe there's a buying opportunity, but that means you actually had cash, and that means you actually had proper position sizes, and that means you're not emotional during a volatility crisis. And I would lean to actually not doing purchasing during a volatility event, and be comfortable with how much I've carved out, how much free cash is on the sidelines to cover bills and expenses while shit hits the fan. Credit is frozen right now, from a corporate perspective. And it doesn't nothing in financials happens in minutes. It's kind of like celestial events. That's the best description of how these financial matters play out. It's like, a supernova explosion takes millions of years. So if credit is freaking frozen in from corporate America perspective, this shit's going to take weeks and months, and maybe you get to a threshold where you have significant price volatility from a day-to-day basis. But ES. But these types of things, these type of events, let's go out to the monthly chart. And you were talking, even in 2020, it was 2 solid months of depreciation. And that was with historic intervention. You go back to 2008, it was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 months. 16 months of depreciation and risk off, of fear propagating through the system, and liquidation occurring to carve out liquidity and to carve out additional cash position because people didn't want exposure to the risk. A year and a half. That's a celestial event. So what did they do and why did they do it? You sell to carve out cash, and then you wait and you have cash, and maybe you buy, maybe you don't, as long as you have enough to pay your bills. So that's kind of where we are from a macro financial perspective, and we're worried about micro financial things in crypto markets. Listen, if you could have sold, you probably should have sold. And why would you have sold? Because you didn't have enough of a cash position. If you have a proper position size, I kind of want to retain exposure to curve finance. My entire portfolio construct is appropriate because it was sized properly. It was sized properly. Assess your risk. Tapsy, you're very welcome. Break it down. There's plenty of fear. What can you do? How do you respond to fear? Do you have something that you could sell? Should you sell it or should you not sell it? You probably want to retain some exposure. What if things go well? What if things don't go well? You probably should have sold some for cash. If you need to write this shit down to see your choices, do it. And writing it down maybe to see the ultimate choices that you can make should alleviate or allow you to digest what you're feeling, the emotion that you're feeling. Are you afraid? Are you nervous? Do you have anxiety? Are you comfortable? And your goal should be to be comfortable engaging with these markets, knowing that you identified the possible choices that you could make. You considered option A or option B, because that's really all there is in markets. Do you buy or do you sell? Or do you do nothing? So there's A, B, and C. And why did you choose that particular option? And what are the implications of choosing that particular option? And that's why yesterday I was tweeting that I'm barbecuing. What could I do? I was going to enjoy my day with my family and barbecue. That's it. I hope that helps. Be granular, be specific, and break things down, and be a reductionist. What can you do? What can you do today? So my 2 cents to folks that are feeling anxiety and you have a liquid position, price is probably going to be volatile. So if you're nervous about the volatility and you have anxiety, you probably should sell some. You probably want to retain exposure to a degree. And then you're covering both possible directions of price action. If recovery and strength and everything we expect to play out in the future does, then you want to have exposure. If it doesn't, then you're grateful that you carved out some cash position to retain some capital. If you are uncomfortable with all of this, then you have to sell everything, and that doesn't make any sense. What's the point of being here in the first place? The most important thing to always remember about markets is there's no leaving markets. You need to navigate markets because guess what? The next liquidity cycle, as Michael Howell and Raoul Pal talk about, it's inevitable. in which case owning anything is going to appreciate. So you have to remain in the market until then. And the whole point is to survive this kind of volatility until then. Listen, my time horizon is if and it's not even yearly. Like I've talked to some asset managers. Like I have some family friends that are asset managers, fiduciaries, and they talk about their returns year over year. And that's cool and all. Like Druckenmiller's got like plus 20 something percent year over year returns for like 40,000 years. And that's extraordinary. But define your own time horizon for measurement. If you're net positive from a 2 year time horizon perspective or a 3 year time horizon perspective, and that cycles, and that cycle continues, then that's an effective measurement of how well you're doing over time. You have to define these things for yourselves and how you measure success. And I think that that's reasonable. I haven't thought about it myself, but thinking about it now, if I'm net positive from a crypto market liquidity cycle perspective, end of Q4 2019, Q1 2020 to now, if you're net positive, and then you enter the next cycle, if it starts in 2024, summer 2024, I don't think we're going to have to wait until Q4 2024, start of 2025. I think somewhere next year, maybe early next year. If you're net positive for the cycle, then you've made good choices and you've done well, especially in a market where you have considerations that are unlike anything in traditional finance. You have no establishment. This market didn't exist pre-2019. It didn't exist. And you're in on the ground floor. This is the ground floor. People like to think in too short of a time horizon. They're like, this right now is the ground floor between Q1 2020 and now and the next cycle, this first cycle. That's ground floor. It's not like last week. Oh, did you get in early? Last week? Last month? No, try 3 years ago. All of this time is being in ground floor and trying to figure out what survives into the next cycle. Try that for some perspective. One curious view, a pleasure. Tim Can, hey, no, I appreciate your content. I wanted to ask if you stumbled over BitSensor via Twitter. No, I have not. DNA, very well said. Sir Joe, a pleasure. Curve will survive. Mitch should have BTC or S stables on the side in cold storage. Well, I would also speculate that there's probably large actors involved at this point. There's probably financing available, and it's not even like they're financing. All they have to do is finance the price, or they're financing maybe adding either collateral, third parties interacting with those debt positions, or adding liquidity and adjusting it in that regard. So there's plenty of things that I could speculate from an organizational or collusion standpoint that could play out. First off, a fair amount of capital is going to get returned, which is quite interesting. Where the hell is this person going to liquidate these assets on chain is quite interesting to think of, because that liquidity just simply doesn't exist. And it's in no one's interest to destroy a protocol. A hacker just wants to capitalize. So you're not going to take them onto a centralized exchange to try and find that liquidity. You're not going to transfer CRV to Binance. That's done. Then it's going to get frozen instantly. So this should be interesting. I see the best in things rather than the worst. So I'm here for the ride. That's the most important thing. I look forward to seeing what plays out. Being cool, calm, and collected. Ryan, hey Cap, hope you had a lovely weekend. It was nice barbecue, friends and family. So that's always something to be happy about. Raul, do you think there's enough liquid curve in the market? No, there isn't. There just isn't. It doesn't exist. Paired with stables, that's the whole point. That's where price point comes from. So on-chain is all messed up. On the exchanges, it's centralized exchanges. That's not the case. So that's why Chainlink is so imperative and part of the equation. So you have on-chain price, you have different types of oracles, and you take the aggregate of all the oracles, and that's great. And that's why these systems are heading in a good direction, where you're able to minimize trust of one thing and find confluence, additional sources of information, and you aggregate the information, and it's all just heading in a very interesting direction from a structural perspective of tools and services to build, more sophisticated tools and services. No one ever argued that chain linkage is mission critical to this type of financial infrastructure. I've only ever argued that it's not necessarily a lucrative investment, considering the structure of the portfolio that I want to achieve. Jesse, I love you, bro. Thanks for sticking around during these doldrums. Yeah, where are you going to go? What else are you going to do? Yeah, we're not going to do this, and we're going to get a second job. We're going to find another job. Okay, you should be doing that anyway. You should always be finding another job. If you could increase your investment in employment and get more salary, that's always a thing to do. I did that for a long time, and I stopped doing that probably over the last like 2 years, 3 years. I used to, I at one point in my career, I would get a job and immediately start searching for another job. That was really bad. But that was it. Isn't that the process? The process is like, oh, escalate your career. All right, I was escalating my career. I wasn't waiting. I wanted to escalate my career fast. Okay, get a job, find another job, find another job. That was a very hectic, frantic. I was filled with anxiety all those years ago, trying to get to where I wanted to get to. And I'm grateful that I'm done with that. I don't know how to think about it perfectly in hindsight. Am I happy I behaved like that? Sure, it got me to where I am. But, everyone always wishes they had today's experience in the past. Man, that was a lot of anxiety back then. Hopium, do you think the market is waiting for clarity regarding Bitcoin ETF? No, this is all about liquidity. Follow Michael Howell and even Raoul Pal. I don't care about detractors. I don't care about people that have certain opinions. I've had my opinions regarding liquidity for a variety of rational reasons, and I had my opinions of liquidity prior to even seeing Michael Howell's content. And then I saw his content, I was like, oh shit! I just understood liquidity from literally an electrical engineering standpoint, and I was like, this just makes sense. If you want to see number go up, you want to see a positive sum environment. You want to see capital flowing into the market. I mean, that's pretty simple. So what conditions from a macroeconomic standpoint will you see capital flowing into the market? We're not there. Why? Because we see capital flowing out of the market. It's been a negative sum game since the beginning of 2022, Q4 2021. From a crypto market perspective, overall macro financials, liquidity has been on an upswing, and arguably the bottom is in. But this kind of stuff takes months, maybe a year or two to play out, for cycles to play out. I told you the celestial event comparison. So it will take time for risk appetite to settle. And how the hell are you going to have risk appetite in a market where corporate bonds are yielding 0.16% above the risk-free rate? No, this is where a variety of complexities emerge. My expectation, my base case, is a sharp impulse down in liquidity conditions in the short term. Short term being between now and Q1 2024. That's my general gut instinct. We're going to see something snap, something break, and it's either the end and we have global conflict over natural resources, because if capital's imploding and capital is predominantly credit, then you're going to have an absence of natural resources, and you're going to have literally existential crises from country to country. And or you have liquidity management, which I think is my base case for the relationship between sovereign nations globally. A collusion of global liquidity management to keep the system operating. I mean, it makes sense. I mean, how else do you keep the system operating? You have to manage the balance sheets to make sure that liquidity is available for debt to roll over and to avoid especially sovereign bankruptcy. Is that even a thing? But the big corporations, you can't have everything collapse. Maybe you can have managed implosions. Oh shit, that's exactly what's occurring in the regional banking system. Managed implosions. Impaired balance sheets, failure of banks, and collusion to have them absorbed by a larger entity that has a more stable balance sheet. Oh shit, a managed liquidity environment. So, what happens if a liquidity impulse, destructive impulse, gets ahead of policy and the collusion factor? Okay, so you have a sharp drawdown in liquidity, but we've seen time and time again liquidity will be managed because it's all connected. And the liquidity cascade ultimately takes down sovereign nations. And then you have the scramble over resources. You have wars. And I think that's in no one's best interest at this point. It doesn't matter what a country wants to do, whether even the stuff that's going on in Russia and Ukraine. Yes, that's a war. There's a difference between an isolated war and a global hot war. Global. Big difference. I don't think anyone wants that at all. Especially, I don't think, I'm not the mind of Russia and China, but I don't think anyone wants that. It's just human nature. It's not going to get any individual country's population in a good position. So, one good thing about Anand, what's your current asset allocation with crypto, and what is your allocation between crypto and TradFi assets? Uh, 75% crypto, 25% brokerage account. That's assets and investments, but I do consider Bitcoin, Ethereum, and stablecoins cash for that matter. So that increases the complexity of defining the overall structure of what I have. But I probably 15-20% cash and traditional dollar liabilities bank account, which I'm not fond of. But the risk of that as compared to the counterparty risk associated with stablecoins, a counterparty, I mean, that's a good part why I define Bitcoin and Ethereum as cash, because literally they have no counterparty risk, or I would argue significantly less counterparty risk as compared to liabilities in a bank account. So then again, I have moved capital from regional banks to GSIBs, the big banks, so that reduces my risk exposure. But no counterparty risk with Bitcoin and Ethereum. I mean, you still have counterparties. You still have not counterparties with regard to access, but you're still dependent on actors that you have no control over, particularly proof of work miners from a Bitcoin perspective. You have no control over their actions or what sovereigns can do to their infrastructure, eminent domain, and just nationalize the mining operations. So there's some big risks all over the place. But you have to weigh your risks relatively. And that's the overall structure. Hope that helps. Basically, you want to be diversified in cash. You want to have cash. I sound like a dividend investor or like one of those real estate investors from social media. It's like You need to have your cash flow. You need to have multiple sources of income. I mean, come on. I mean, isn't that obvious? Why do you have multiple sources of income? Because if one isn't producing income, you have another, and if that's not producing income, you have another. You want multiple sources of income. That produces redundancy. That's this form of diversification. Now that's cool. So you probably want that. And obviously that's harder with a smaller amount of capital. It's easier to make money when you have more capital. You have more choices, more options. More choices, more options increases the complexity of the decision-making process. So the hard part is to simplify that equation, because more choices and more options is more anxiety. So, I mean, that's the whole exercise we do here, is to try and simplify the equation for persons with a moderate amount of capital, because that's obviously my perspective. And so how do you do that? So typically associated with a moderate amount of capital is increased complexity, associated with more choices and options. So how do you simplify that equation? And that's kind of all I think about, is how to simplify the equation. One thing about the curve fiasco is it makes for good marketing, especially if they return the funds. Makes me wonder if it's an inside job for that reason alone. I mean, that's why I posted yesterday, plot twist, all the stolen curve gets burned. I mean, why not? If someone stole the curve and they're afraid because, law enforcement or just a bounty hunter, come on, why not? Or private investigators, burn it. Burn the evidence. Now, now they craft a story like, oh, I'm sorry, I did this, but I burned it. I did it for the common good. Come on. Is that not plausible that it gets burned at the end of the day? There's a variety of interesting things that goes through this somewhat crazy person's mind about what may play out. And the first thing I think with regard to what may play out, I want to see it. I want to see what's going to play out. You can't make up a better story than the shit that goes on in crypto markets. Everything in traditional finance is so yucky in comparison. I find this shit interesting because it's global. It's not just boring traditional markets. And JB, do you think Michael selling of a big chunk of his curve to a major stakeholder in order to clear his on-chain debt, presumably a much lower price, is a likely solution to all this? That's an interesting thought. I do not know what anyone will do, but that's the appropriate type of question. Notice that you have a question mark at the end of your statement. It's a question. Ask these types of questions. What could play out? And I sure as hell want front row seats for what might play out. Because why not? Why not? Wouldn't you try and negotiate an arrangement, a deal, and have allies and build partnerships? And how could there not be a partnership from large entities at this point? Isn't this the most remarkable financial infrastructure you could think of from a global standpoint? The software that is deployed and been tested, I consider everything up until now in all of crypto markets test net. Isn't this the most remarkable test net you've ever seen? From a functionality standpoint, from a usefulness standpoint? Wasn't it the IMF or whatever, the WEF, that did testing with the curve contracts? Wouldn't you want to be in some sort of contact, talk, arrangement with the person who has a capacity to write those contracts? It's a variety of interesting things that can be the case. You never know what is the case until you see things play out and the media and the story that is told. But you could go in very interesting directions trying to peer behind the curtain of what is actually going on. And almost always you could expect what is going on to be pretty damn interesting as compared to what we hear from the general public perspective as to what is going on. It's kind of like the whole aliens fiasco. There's some interesting shit going on back there, and I'm not going to speculate to the point of being uncomfortable about it, but I'm very comfortable stating That's got to be interesting to be the person that knows the deal, knows what is occurring. Come on, that's cool stuff. Um, James, cheers, Cap. Happy to stay helping us to stay rational. Well, that's the only way to survive, and to quell that uncomfortable feeling, and to put a smile on and be like, I want to see what's gonna go on. This shit is interesting. Chill pill, right, Nathan? I mean that's a good way to say it. Uh, I get my anxiety too, but I'm curious. I'm more curious than with anxiety nowadays. Please don't cuss so I can play with the kids in the car. Oh, sorry. I know. I have my tendencies. I can express myself in better ways. I can. I will do better. Hopium, favorite books, trading or non-trading related. Keep up the informational streams. You're welcome. Pleasure. No books. YouTube as the most meaningful real-time information that you could possibly get. A book is crafted. It's great to hard code thoughts and ideas, but YouTube is real time. You're hearing from the mouth of some of the greatest minds in finance and real vision. It's better than a book. You're hearing their real time thoughts and opinions. That's like a real time book. So YouTube and real vision always mission critical. And frankly, me listening to Michael Howell nowadays, I'm like, oh wow. The way he thinks about things is the way I thought about things. And then you hear confirmation or confluence supporting your ideas. Now it's imperative to be contrarian also, which is why I'm like, it's fun to listen to, Michael Guyette at times. I'm not too fond of it's all the world is going to end, but he's not that. He probably says basically what I say as well. You have a strong impulse down, and then you have collusion and recovery, like Q1 2024, and that's basically to a degree what everyone says, and that's what the chart says. I mean, look at this chart on the screen. Strong impulse down in 2020. Credit freezes up. World is coming to an end. Liquidity intervention. And the whole world continues. I mean, isn't it in the everyone's interest for the world to continue? And for the world to continue, these financial markets need to remain liquid. You need to have credit flowing. Otherwise, you can't roll over debt. And then corporations are failing, and then you don't have any organization supporting the functions of society. So it's all going to get rolled over. The game is going to continue. Don't bet on the end of the world. Bitcoin isn't a bet on the end of the world. The only money left are the people that had the courage to buy Bitcoin. No, that's so negative. Be more positive. It's a wonderful system. Bitcoin's great. Love Bitcoin. It's great cash. Good form of cash. No counterparty at all. T2 sugars, loving Olympus's RBS mechanism, stable up and stable down. Sure, there's a derivative. In the end, there's two types of products. You have growth and you have value, which means you have an asset that you're interested in capital gains. One, growth, or two, value. You have an asset that you're interested in cash flow, the amount of revenue that an enterprise is making. And then you have three, derivatives of those products that are, combination of multiple types of products in a form of concoction. A craft beverage, if you will. So, pick your poison. I'm not a fan of too much derivatives, long 100x long perps. That's not my cup of tea. I'm a traditional value investor at this point. It keeps the emotions and the anxiety low. Austin, you're very welcome for the rationale. Brian, happy Monday, Captain. Let's see the damage that was inflicted. We'll wrap up the stream in a couple minutes. So, 62 cents is a fair amount of damage. We still have a strong structure in place. We don't have an invalidation of the year long inverse head and shoulders. If you have, from a optimistic perspective, if the price point gets down to 55 cents and goes up from there, one, that's a double bottom. Two, that's a tweezer bottom. Three, the structure of the inverse head and shoulders is still in play. Four, you still have the Adam and Eve pattern. Now, and that's on the positive, the optimistic standpoint, technical structure is still very much intact. And that's meaningful. Why? Because that means actors are stepping in, confirming this technical structure. Why? Because everyone sees this technical structure, especially vested interest and parties that have an interest in the future of the system. They're like, oh, we should buy. Why? To preserve the technical structure. Because it's important. Because everyone sees the technical structure. So maybe a nation state's like, oh, I'm going to buy Curve. Why? So we preserve the public sentiment, and the technical structure is preserved, so we preserve the investor sentiment. That's all real. Technicals give you a vantage point, a way to look into the minds of all the people interacting with the protocol from a financial perspective. Who's doing what and why? It gives you information about what they're thinking and why they're thinking it. Now, obviously, if you have a breach down to the 40s and you have a breach down to the 30s, you're starting to, you've invalidated this technical structure. And this is a technical structure that's a year in the making, and that would be pretty much very bad from a technical perspective. Now, bear in mind, you have invalidations of technical structure, and then you have Humpty Dumpty putting himself back together again. It's like, fake out breakout, where you have a breakdown of a rising wedge, and then it literally just breaks out. You have temporary, transitory invalidations, and then resumptions of trends all the time. So that's meaningful. So, but if you have invalidation of this structure, it's not pretty. It's not pretty at all. And there's reasons to be less optimistic and increasingly pessimistic. And you probably, if you have liquid positions, you probably want to take more cash. You adjust the position size to have more cash on the table rather than position. And that's it. I would still want to retain exposure. Nothing is invalidated with the system, the Federation, CRVUSD. Nothing has changed. Nothing. So all you're literally witnessing is a complexity with regard to price point, with regard to debt positions, with regard to potential sell pressure from malicious parties. So time. I certainly don't want to jump into actions right about now. Albeit that's what some people love to do. They love to jump into actions. Take that risk. You wick down to 40 cents and a potential invalidation of this year-long structure, and then it wicks right back up to 60 cents in 8 minutes. There's your greatest risk, greatest reward type of scenario. I said Bitcoin looks good. Nolo's an interesting one. I still have that YOLO position over from Solana that migrated over to mainnet, so I've been providing LP for this. Go figure. The captain in an LP position. So I'm quite comfortable with the LP position because obviously coming from Solana, I'm in from down here. So it goes up, goes down, goes left and right. This is a very rare instance where I literally, you bought the bottom if you migrated from another chain and you're in literally at the bottom 56 cents. So the LP position is actually very comforting to me in this scenario. I'm capitalizing with cash flow on the volatility, ups and downs. I know the vested interest. I know the parties who own the vast majority of supply. So I'm quite comfortable with this position. Go figure. Entries are the hardest thing. I've talked about this a lot. And entries are the hardest thing anyone ever does in capital management. Like, what am I supposed to do about the current position? It's all locked. Can't do anything. So therefore, I'm comfortable. And my entry was a long time ago. It was years ago at this point. can't do anything. So that complexity of trying to take a position is no longer something I have to fortunately consider, and that simplifies my equation. Um, Last couple questions, Anon. Isn't there still a large overhang of curve waiting to get dumped? Yeah. Are they going to dump it? Are they going to burn it? Are they going to, what the hell are they going to do with it? Who knows what the hell they're going to do with it? And I look forward to seeing what the hell they do with it. I haven't been keeping up with the minute by minute developments though, so I don't know. Yeah, the minute by minute developments will drive anyone nuts. Don't worry about it. Check back once a day. Curve also had a big hit to its fundamental value, a TVO withdrawal. Yeah, and we'll see what plays out. That's it. What's more to be said about that? TVO, they're probably still going to have the same volume. I don't expect much of the volume to change um, because you still have the same efficiency. The pools are remarkably efficient, even when they're very much off peg, as many people observe, but you're still getting the great swap rate. So there still could be great volume through the protocol, even with a reduction in TVO. Therefore, you still have good cash flow. The narrative gets preserved. Capital flows in over the next 6 months to a year. Time horizon. You got to bump the time horizon. Check back in 6 months. Check back in Q1 2024 to see what the hell's going on. Structurally, total capitalization of the markets is clearly unaffected. I like the way especially total looks. Where's total? Let's look at total and then we'll jump off the stream for today. You're above the 200 EMA, 200 SMA is above head, 100 SMA is down here. Structurally, this looks supportive. Supportive. So check back in 6 months, Q1 2024, for a breach above the 200 SMA, 339 billion? Is that really billion? $339 billion. Wow. That's a lot of market cap. Total market cap. No, total market cap excluding crypto total market cap. What was I looking at? 300s. All right, this chart is funny with the numbers. You see the scale changing? That's why. Total market cap includes Ethereum and Bitcoin. So this is over $1 trillion, I think, at this point. Yeah, 1,000. So this chart is funny. It's messing with me at the moment. Total 3 is total crypto cap excluding Bitcoin and Ethereum. Yeah, this is all messed up too. Is it? It's not 2,000. It's not too. This is like 300 billion, I think, 200 billion. So I don't know what the hell this y-axis is. But anyway, structurally, it looks very nice. You'll see it's structurally very similar to Bitcoin and Ethereum because those are the predominant components of the overall crypto market cap. Hope that helps. T2 Sugar, you have a good one. Thank you everyone for joining, everyone for sticking around. 38 people in the stream, 14 likes. Hit that thumbs up button. Click that like. I appreciate all of you. Tell everyone to subscribe. After party on Discord. Link in the description below for the most rational community in the entire crypto space. I will see you again during the week. Thanks for joining. Peace.